of Nomura and his colleagues have written a note wherein they've spoken about Asia, how they are selectively constructive out there, but are cautious at the start of 2025. So they write that there is a cautious stance for 2025. Why so? Because there are three reasons: elevated geopolitical and trade tensions amidst looming tariffs, monetary policies that are less supportive than what they have been hitherto, and China's restraint on fiscal stimulus. All of this makes for a cautious stance for Asia at the start of 2025. But they say that investors will have to be selectively constructive on some of these markets later on in the year. However, for India, they are overweight India. They say they are structurally positive, but there are some near-term risks. Now, earnings outlook is relatively strong, expected to be relatively strong, despite some risks of an EPS cut or EPS cuts ahead. But they say that amongst the more defining factors or soothing factors is that India's equity index is one of the most diversified in Asia, with a mix of domestic growth and face of a domestic slowdown. You have global sectors, but because you also have this large domestic flavor within the index, it cushions any kind of global slowdown as well. So it's an equal mix or near an equal mix, and therefore that helps the Indian market optimism. They say that we have near-term concerns on the market given the ongoing cyclical slowdown ahead. However, we think that the structural story is still intact, with the market likely to stabilize 1 or 2 quarters ahead of the bottoming of the economy. Now that they have given that note as well, I'll like to bring up 1 or 2 if we can, and just shows what they are talking about. So this is the EPS cut or EPS number that they were talking about, that how there could be a flattening of the EPS somewhere around here, but then the trajectory continues, as you can see, in FY26 effectively. So that is the first thing that they write about when it comes to the EPS for India. This is the Nomura view. And there is one more chart which is talking about the concentration of MSCI indices. The last point that I was making, the others and how concentrated they are versus what India represents. So that's a positive. Last but not the least, on valuations, I think they make a not too bearish. They mention if the markets were to trade at about 21 times. So that's their view. They like to re-engage in the market. But overweight despite near-term concerns. I think that is the message that is very, very important from Nomura.